up, everybody? It's Omar from the Bullish Bears team. It is May 28, 10:22 a.m. and I'm gonna make a video recapping my two plays, my two shorts on Friday, and we're gonna build our watch list for next week. Unfortunately for me, next week I'm gonna probably be off the grid because I got a test I have to take Friday for work. It's like a certification test. It's kind of difficult, so I gotta kind of apply myself and study. But that not being related to this, let's talk about Friday's play. So this was my watch list for Friday. As you can see, almost everything finished red. But a nice big play on Friday that I took a short on was CYTR. CYTR. So if we look at the actual chart here, you're gonna notice that this is the previous day's close price right here, and we had this nice rip at the open. I didn't catch it, unfortunately, at the open. I wasn't paying attention to it, and I should have. But if you notice here, this goes back to like my momentum trading strategy, where if you catch a stock on the way up, you have the gap up, and look, you had this push up. Matter of fact, let me make this easier with the eyes for you guys to see. So let me just do the fill. Let me go to appearance, do fill, do apply, and yeah, it'll be easier for you guys to see. So you're gonna see that you have this push right at the open. You see the volume coming, right? You see the MACD, right? The green's going over the red, TTM squeeze, all that. But forget about all that. You notice the volume and the actual candlesticks. So you get this rip up from the market opens at 61 cents. It tops out at 67 cents. It pulls back, right? So this is your bull flag. Remember what I talk about. You get in on those bull flags, all right? So here's the bull flag. These are people. You notice that there's more volume than selling pressure. Why? Because this is people who bought here or maybe bought on the previous day. They're taking their profit. So what happens? It comes back. It pulls back to the EMAs and VWAP. And right here is your entry. So right here would be your entry. You get a second pull up. And here you go. You get another bull flag, pullback, right? Oops, sorry about that, guys. You get another pullback right here. So this is people taking more profit, but look, there's more volume. Let me zoom in even more. There's more volume, right, of people buying and selling, so you know it's taking profit. Look what happened. It touches the 9 EMA, then you get that last push, right? So you're gonna remember, you get a last push. So on that last push is where you gotta be ready to sell, because you know you're gonna get a momentum change. All right. Now I happen to catch it like right over here, so I saw that it already had. So let me zoom. I already saw that it had its two bull flags, so I knew that this last leg up was more likely gonna result in some sort of reversal. So what I did was I just waited. So I saw it top down here, right? And then I saw the next candle, so this goes into my shorting strategy. So you see how I went from the longing strategy into the shorting strategy. Right here, I saw it topped out at 71. Now, obviously you're always looking at time and sales. You're looking at level 2 to see that there's more sellers than there are buyers. And all of a sudden, I start seeing, less buying and more selling pressure is starting to come in. See, the RSI is hot, so you know it's going to pull back, and the MACD is starting to curl, the TTM. All these are indicators that there's going to be a reversal. So what I did was, once I always do this, as soon as I saw the high here, right here was that lower high, right, that formed. So right in here, I got executed at like 5 cents or 70.3, somewhere in that range. And I'm risking, right? So this is the lower high. This is the high of day. This is my risk, which is, less than like a penny, which is fantastic risk reward, right? And all I'm doing is washing it, hoping to see where it's gonna find its support level. And I may cover in there. I may see if it's gonna form lower highs and continue to wash it down. But what happened was, so I got executed. I think it was 10,000 shares, and I saw the stock forming lower highs. So you see, like, it comes up, it touches back again. That's like sort of a double top. So that's even more of a sign that there's going to be more selling pressure. Double top is a bearish sign. So it starts going down, right? And you see it bounces here. Right here is the lower high. So that's good. That's telling me, all right, stay in, because there's more selling pressure. And here again, right here, another lower high. All right, come here, another lower high, just kept going down, down, down. And then right here, it finds support 65 cents, right? So, you know, this stock, if we look at it over the last 5 days, let me remove this. Over the last 5 days, this stock was at 49 cents. It's up at 77 cents. If we look at it over the last year, okay, it's you know, it's very, you know, it's way over below its height, you know. But you know, I don't expect it to get back anywhere close to $1, you know. But this thing might continue to rip up. I mean, it looks strong, but we'll see. But so in my mind, I'm thinking, well, let me zoom back in. In my mind, I'm thinking, well, all right, it bounced here. Let's see what happens. Let's see if it could break this. I'm staying in. But if it doesn't break 65 cents, I'm gonna cover and just take my profit. So I see it starting to go back up, and I'm like, ah, shit, right? But look, this is the previous low high. Look what it does. It kind of touches it, but it can't break it because now that is resistance. That's why it's so important to mark your support and resistance levels to kind of get a sense of, you can gauge the stock. And then it comes back down, but look, it never breaks below the previous day's low. So it's forming a, look at this, it goes up, it forms a lower high here, right? So you think, oh, so I thought, oh, okay, it's gonna collapse, right? But look what happened. It came back, it touched the previous support price, and that's now considered a triple bottom. You see, it touched here, touched here, touched here, actually that quadruple bottom. So that is a very bullish sign. That usually means that a trend reversal is going to take place. It doesn't seem to want to break. So right in here, I just covered. And I made about 5 cents, and I made about, I don't know, close to like, I think I made like 600 bucks. All right, shorting that, which was nice. And I should have took it long, but, you know, I'm at work, and it's just a lot going on. But you could have took it long, risking, now let me just remove all of these at this point, so you can see it nice and clear. So what I would have done, had I had the time to continue to watch this, was I would have took a long position risking this, because, and the reason why I would have been comfortable taking the position is because, hey man, you know, it tapped like 4 times, it tapped 65 cents, but it didn't break below it. So you know what, I'll take a long position risking that. Now what happened, and there was a lot of volume, so you could have took the position. Look what happened, it just rips, you know, for the rest of the day. It goes up. Now, you know, once it went above VWAP, and that could have been more of a confirmation to stay in. So, you know, now it comes in this range, and it just kind of consolidates, and, you know, it consolidates all day pretty much at that point. And, you know, and then you have this, look at, remember I talked about how you could take, so I have that momentum, let me see, momentum, yeah, this is my document that I sent out to everyone. So remember when these are all my, this is the document that I sent out to everybody, how I find my different plays. Let's see, where is this? Let's see. So one of the, oh, these are the shorter ones. One of the ones that I put here was, did I put it in here? Am I going crazy? Parabolic spike, red to green. These are all the shorting ones. Oh, this is it. Midday VWAP bounce. I love, right? So I talk about this. When a stock kind of goes above VWAP towards the end of the day, VWAP acts as support, and I usually take a trade on it, risking VWAP. So here was the perfect opportunity for you to have done that. Somewhere, if you notice, at 3 o'clock, this stock, look at this, it's just touching VWAP all day, but it's not breaking below it. Right here, you could have took a trade and just rolled this bad boy up. But look, after hours, this thing continued to go to like 75 cents. So, you know, it had a good play. Now it seems to be, where is it? The close price was 73 cents. So it's at 73 cents now. It's definitely going to be on the watch list Tuesday. That was my first play, all right? My second play was, it was a beauty, and I'm still in it, short, was BIOS. BIOS is one of these companies that it never holds its gains. Like, it moves and then it kind of gives it back. So this is a yearly chart. Every time it has a run, like, it'll always like pull back. It always does this. It never holds its highs. And I've been knowing this because, you know, I've been trading for a year now. So I saw the stock, you know, it had this move up. It kind of gapped up, and, you know, it's choppy. So, you know, it's gapping up, and, you know, it's having this run, and, you know, you don't know how to really trade this because it's so, the chart is so funny looking, the volume in it. But you notice here at this point, it hits like a high of day right here, right? At 192, it gaps down. So right here, this is resistance. I mean, this is support. This is resistance, and then it forms this flat top breakout. So when you see this consolidation is gonna happen like this, usually you're gonna get another push, and it got this other push. And look how nice it is. So it rips up, and you see the indecision candle right here. That's my sign. Once it broke over $2 is a psychological resistance point, and I see that's doji. I knew that it was all she wrote for this stock, more than likely. I mean, you never really know. And I took a short position, so I covered. I got in. I got filled at $2, and you see, right? You see how it kind of touches it. It forms this lower high here to $2. It kind of goes, oops. It bounces below it. It comes back above it, and then it touches the low high too. That made it all the more, easy for me to stay in. And I just watched this wash all day. I didn't sell. So your broker, depending on shares and stuff, will allow you to hold your shares for a minimum of 3 days before they cover you. After 3 days, they're gonna just close you out. Some brokerages let you hold longer. It just really depends. Interactive brokers, I think they let you hold like pretty much forever, but they charge you interest on each day you hold the stock. So, I'm still in this, and I'm in 5,000 shares, so, I'm doing pretty good right now. So those are my trades, and you see it just collapsed all day long. And this is a 5-minute time frame. If I go 5 days, 5 minutes. Let me close my door. So if I do, that's a 5-minute time frame. You can just see it just collapses here. Lower high, right here, lower high. I mean, it just continues to collapse, bounced up, lower high. Just tons of selling pressure at this point. So, maybe Monday it gaps up a little bit, but this is probably going to go down to, I don't know what's its previous support level. Let's look at 1 year. Let me just zoom in. So it looks like previous support level is 169. So I would be looking to see at 169, 168, 169 to see if it's going to trend back up. But if it breaks below that, I mean, this thing, and if it breaks below this next support level 162, this thing could go all the way down back to 145, which is what I expect. It always does that. So that's how I knew. So those are my 2 trades, which did well. Now you see why I love shorting. It's just a lot less risk for me. So with that said, all right, just to tell you too, there's other stocks on my watch list. Without going into all of them, I'll show you one just to reiterate that VWAP gap play. I think I saw one. What was it? Where was it? I can't find it. It's not a big deal. All these stocks gave back a lot of gains. I thought I had a stock on here that I saw, which was a nice move up. Yeah, this was RYAM. If you look at RYAM, this is another stock that, if the market opens, it gaps up, kind of pulls back, gaps up. You don't know what it's going to do. But look what happens midday. Like, let me put the 5-minute chart just so you can see it a little better. So, if you notice midday, right, finds so this is the range that you're in, right? So this is the range that the stock is in. It's going in this range, right? Now look what happens. It finds its support level here and it starts gapping up, and you see how it's going. This is the 9 and 20 EMA and the 13 EMA. This is the normally on the 5-minute chart I just use the 13 EMA and VWAP. So let me look at this one. Forget this. Look at this side here, and notice that look what happens. It's like almost a golden cross. The 13 EMA and VWAP, it goes above that. Right here is that midday, that midday VWAP bounce trade where it goes. See, there's another chart. It does it over and over again. These patterns are always the same. Where if you see a stock starting to move and it goes above the 13 EMA VWAP, you can use VWAP as your support level. And you could get in, and look, you could have got in this, and this thing just rolled VWAP. You see how it keeps bouncing off the 13 EMA? Look at that. It just kept going. You could have just rolled this all day. You have to catch these, obviously, so you got to be mindful and look at the stocks throughout the day, to see how to see it. But had you caught it, or even caught it a few cents above it, you still could risk and get in, And I see this happen all the time. So even though the market was down, you have plays that are going up. And everybody always assumes that it has to be penny stocks, that you have this range. That's not true. That's why I put stocks between, 20 cents and $30, because I see stocks in those ranges move big. All right, they move just like penny stocks. This is a stock that had, let's see how many shares, 43 million shares. So tradable. So it's not a penny stock. It's not a low float stock. I'm sorry. So low float stock is 20 million or less available shares to trade. So I just wanted to talk about that. Now, let's build our watch list for Tuesday. So again, if those of you don't know my criteria, I look for stocks between 20 cents and $30. They have a minimum value of 500,000 shares at up 5%. We hit scan, we got 47 stocks. So we're gonna go here, and this is where we're gonna look for our plays. Oops, let me get out of this. All right, so let's look at the charts. So these are the stocks, and we're just gonna flip through the charts and we're gonna build our watch list. So let's do a watch list for create new watch list. We'll say 5 to 30 because tomorrow's the 29th, the 30th. So 5, 30, 17. Oops. All right, we're gonna hit save, and we're gonna build our watch list. So this first stock here was MXSG. I don't know what happened here. Literally in a 1 minute time frame, the stock went from 7 cents to 69 cents, like a clear pump. So no, that's some garbage. NIHD, yeah, I missed this. This had a nice opportunity for the short. Look at this. Let me put that on the 2-day 1 minute. And if we look at the chart, right? So look what happens here. You get this sort of, so the stock starts gapping up, right? And you see right here, it's sort of its high point, 60 cents, right? And you notice, and when you see these happening, this is what they call a Foos force pattern. It's like an ascending triangle. This is like his strategy, where he'll just look for stocks like these, and then he'll get in right before the breakout, or risking the breakout. If you notice, right? Let me zoom in here. It goes, right, first off, it goes from red to green, so it broke above the previous day's close price, and you notice how it's forming higher lows all the way up. Here's the high right here, and it keeps going up. Well, a lot of stock traders see this, and they buy it on the breakout, because you see the MACD's curling, the TTM squeezing, and they buy, and they get in right here. And, you know, you see this gap up, and then these are like little bull flags along the way, like little micro, what I call micro bull flags. Right, so right here is your bull flag. So you gaps up, pull back. Right here would have been your entry. Gap up. This is an indecision candle. Stock doesn't know what it wants to do, but this is theoretically a little micro bull flag. Goes up, so you gap up. Now this is a pretty bull flag. You can see it's very clean and clear. So these are all bull flags along the way, and I'm on the 1 minute. When a stock is this volatile, you have to use the 1 minute time frame. And you see how it's staying above the 9 EMA. It's never breaking below it. So you know. This is short sellers getting squeezed. That's why I keep going up. And then you see it gaps up, and it pulls back to the 9 EMA, has another push. So here, this is considered another little bull flag. Now, normally you don't get these many flags and continuation up. You got 1, 2, 3, 4, you know. But it never breaks below the 9 EMA, and you see the value. There's much more volume, right, than selling. So there's more people buying than selling. So you know these are just people taking profit along the way. They're not like selling out their position. And then what happens is it has that last push to 119. So it bounces up. It goes all the way up to 119, which is incredible. And then it kind of, you know, it consolidates, right? So people take it sells off. Now here, had I been watching this, you know, I probably would have taken a short right here at 107. So I would have seen that at this point, this is higher day, right? So you see it's that, you know, it's higher day here, and then it bounces and it comes back up, forms a lower high of 107. And right here, I probably would have taken a short at like 107, thinking that it's going to have it be done. But it comes down and breaks below all the way down, and it touches the 20 EMA here, 87 cents. But look what's happening. And let me remove all the drawings. And I'm doing this just so you can see patterns, because that's what trading is all about. It's about patterns, not about fundamentals. But look at this. It forms this U-shaped breakout. So when you see a stock starting to form a U-shape like this, you're going to get another breakout. Right here is high of day, and this is technically where you really, you know, if you were going to take a trade on it, right here is the safest play because it's breaking high day at this point. But traders who are experienced see the U-shape forming, and they see that it's not dipping below the 20 MA, and they're buying right here because they see the U-shape forming. They're taking a chance to get in early, to get a push, to get a piece of that, all right? And that's what happened. You get that last push, and then right here would have been the beautiful short, because here's the doji, right? That's giving you the high of day, okay? And this is where the perfect short would have been right here. Boom, it goes up, comes back, forms a lower high right here, which is at 124 mark. And right there, I would have shorted, risking high of day. And you see it comes back, it touches it again, and that's more of a confirmation that it's a double top. And then this thing just completely collapses. It just collapses all day long. And you could have just rolled this bad boy all the way back down. You know? Nice, beautiful short. Okay? That's why I love short selling. Alright? So let's pause this. Let's see if I can pause this.